Welcome to the Explainer. We're jumping straight into a radically transparent look at a live, algorithmic trading journey. No hypothetical backtests, no flashy marketing promises. Just opening the books on a real cent account to document the week-by-week reality of the GoldMining Loonie strategy navigating the USDCAD market. Today, we're focusing on week 24. It's a period that perfectly captures the calm, analytical, and professional approach you absolutely need for long-term survival in these markets. Okay, let's dive into this. The theme for this week's analysis is pretty straightforward: patience pays off. We're treating this account as a genuine trading progression, not some hyped-up performance showcase. So, full disclosure, this week wasn't about fireworks. It was about absolute ironclad discipline. Truly, it's a masterclass in why sometimes doing almost nothing is actually the most profitable decision a system can make. Moving on to Section 1, the Weekly Trading Debrief, a microanalysis. For the entire week, the account saw highly controlled, incredibly small growth of just plus 0.19%. Now, in an industry that's completely obsessed with doubling accounts overnight, that number might seem shockingly low, right? But I want you to look at this not as a lack of performance, but as direct, hard evidence of a system deliberately and strictly reducing its market exposure during suboptimal conditions. Just to be radically transparent here, that 0.19% equates to exactly plus 6.25 cents in profit on this cent account. Earning 6.25 cents might not sound like a thrill ride, but it absolutely proves that the system prioritizes capital preservation over forced action. We're not hiding behind percentages to mask the real dollar amounts, because this explainer documents actual trading conditions. Earning steady returns is all about controlling your exposure. And this brilliantly illustrates the reality of that cautious approach. Breaking down the MetaTrader 5 weekly summary, there's a flat 0% maximum drawdown for the week. The recovery factor and profit factor are incredibly clean, and that's because, remarkably, there was literally only a single executed trade over the entire 5-day trading period. One trade, zero drawdown, absolute control. Verifying those exact numbers through the weekly profit allocation, we can see the precise makeup of that profit. We secured a gross profit of 6.17 cents, plus an additional 0.08 cents earned through positive swap rates for holding the position. That brings our weekly total to that perfectly clean 6.25 cents. Zero gross loss, zero commissions eating into the margin, just the exact profit captured. Section 2, Anatomy of the Trade, focusing on controlled execution. One trade, zero emotion. It's vital to understand that in a professional trading environment, choosing not to trade is an active, highly disciplined choice. When the market just isn't offering a clear statistical edge, sitting on your hands is the hardest yet absolutely most important skill. The algorithm simply doesn't feel that human urge to jump into the market just out of boredom. Getting into the exact digital receipt for that solitary action, the system executed a 0.03 lot size buy order on the USDCAD. We have the precise entry point at 1.39348 and the exact exit at 1.39635. It was essentially a surgical strike. Getting in, capturing a highly probable micro move, and getting out before the market could even think about reversing. So the crucial point is really the timing of the execution on the 15-minute time frame. The algorithm perfectly identified the prevailing upward market direction, rode the momentum, and closed the position well before the subsequent choppy consolidation phase began. It's a textbook example of avoiding the noise. Section 3, Macro Context and Volatility. Of course, the algorithm doesn't trade in a vacuum. Throughout week 24, we had several massive external factors collectively driving US dollar strength and Canadian dollar weakness. Traders were heavily monitoring shifting expectations from the Federal Reserve regarding interest rates, alongside fresh US inflation developments. On top of that, fluctuating Treasury yields, the Bank of Canada outlook, and unpredictable global oil price behavior all combined to create some serious volatile chop. The system recognized these conflicting signals and took a defensive stance to just avoid the mess entirely. Section 4, Total Account Progression, the Macro View. Now this is the ultimate reward for all that weekly discipline. Since its launch, the account has achieved a massive 34.26% total growth. And let's be real, you don't get to 34% by recklessly gambling every week. You get there by stacking tiny, consistent gains, surviving the volatile weeks with near zero drawdown, and letting compounding do the heavy lifting over time. Taking a look at the total summary report to see how this builds a larger picture, we currently have a total balance of $3,312.31,
well up from the initial deposit. The progression month by month shows steady, undeniable upward momentum. It really proves that small gains compound powerfully when losses are strictly mitigated.
Now, what's really interesting here is the dynamic between the total growth and the maximum drawdown. Despite achieving over 34% growth, the system has maintained a remarkably low max drawdown of just 5.27% over the entire long haul. Think about that. It's essentially limiting downside risk to an absolute fraction of its upside potential. That right there is the hallmark of a robust survivor-first strategy. We can further verify that resilience by checking the total balance versus the equity curve. The closed balance steps steadily upward, while the fluctuating equity, when trades are open, hugs that balance curve incredibly tightly. Even during minor historical dips, the system absorbed them smoothly. It's just concrete proof of its steady capital preservation capabilities. And that brings us to Section 5, the road to $100. Steady growth often comes from periods of absolute patience, rather than constant forced trading activity. This principle is literally everything. Capital preservation is the absolute key to surviving real trading conditions. If you can just protect your account during the weeks when the market is hostile and unpredictable, the profits will naturally take care of themselves when the conditions finally align. And so, we keep our eyes locked on the long-term objective. The target remains 10,000 cents, or a $100 balance. We're sitting at roughly 33.12 cents today, proving that the methodology absolutely works. But the ultimate test remains. As global macroeconomic pressures mount, will this strict discipline continue to outlast market volatility? We'll be right here to analyze the data completely transparently as the journey continues.